Hello and welcome to another update video about gold futures. So we are not really breaking out in any direction at the moment, so the overall pattern from the last video that we discussed is still valid. My interpretation is that in the preferred scenario, a 5-wave move to the upside from the February lows completed. So what we have in my interpretation is a wave 1 complete, a wave 2, the third wave top, which formed a top basically here on the 8th of March around $2,200. All of that is done. Then we had a wave 4 pullback, which was definitely deep enough, and a 5th wave rally. This would be my preferred interpretation. And then based on that idea, we would have started now a wave 2 pullback, which could unfold as an A, B, C structure. And the support zone is defined between $2,043 and $2,135. This would be the standard support zone in wave C of 2 or for wave C of 2. Or generally for the wave 2, not just for the C wave. I mean, for wave 2 to complete, it's the yellow zone. And we have 4 Fibonacci levels to watch, even though gold normally wouldn't break below the 61.8 Fibonacci level. If this setup is correct and if this structure is correct, then we should hold above $2,081 now. Now, in the alternative scenario, this last rally, which topped on the 21st of March around $2,225, it could have only been a high B wave. This would be my alternative perspective, and the C wave to the downside is unfolding now, and that would then complete a wave 4, and we would get one more high in wave 5 here in the yellow scenario. However, I prefer the white count, okay? So that means we have enough waves in place to complete or to count and interpret a first 5-wave pattern complete. Then this probably over the coming weeks, this structure should develop a wave 2, so an ABC structure, and that would be a wave 2 pullback. And then a third wave rally could send us higher next. And this is really where it's getting interesting. I mean, this is now a first 5-wave pattern to the upside. I think it's important to approach this the right way. So we have a first 5-wave move up. That indicates again that we could continue our uptrend that is forecasted to get to around about $2,500 next. I mean, not in a straight line, but possibly in 2024. So that means I need further confirmation for this. A good, solid Elliott wave 1-2 setup doesn't only consist of a wave 1, what is what we just see now there, wave 1 complete. No, we need the wave 2 as well. So I need a nice and clear wave 2 correction in an ABC structure. And if we then find support in the yellow zone, the next rally to the upside could be really the main element of that third wave rally. And we would be talking about the third wave of the third wave. And I would see this as an ending diagonal. So the ending diagonal in my interpretation on my chart started here in October 22, in which we have an ABC structure in wave 1, an ABC structure in wave 2, an ABC structure in wave 3, 4, 5. And therefore we are now in wave C. That's the idea of 3. And this is already quite a strong uptrend, but the next pullback would be wave 2 of C of 3. And then we should get into a third wave of the C wave of the third wave, So that would be quite a bit of a rally in the main element of the third wave, and the third wave is typically the strongest wave. So pay attention. I think at the moment to market behavior and market developments, price structures, because it could get very interesting in the gold market, especially sort of that main element of a third wave. And that could take several weeks, I don't know, maybe even a couple of months to then get towards that $2,500 level roughly. And in the very, very short term, if we go to the 1 hour time frame, I think it is possible to argue that wave 5 might have bottomed, so wave 5 of A, We might now be doing here a B wave corrective rally. It's a 3-wave move up at the moment, but I would prefer it to be a little bit stronger, that B wave, and then we could follow in a C wave to the downside. That's the idea at the moment. Yeah, that's the idea. I mean, I can give you a standard resistance for this white B wave. And standard resistance is between 2,191 and 2,210. Only a sustained break above 2,210 would make me consider that we are still in the yellow count, okay? So it takes a break above that resistance level to consider that we haven't topped yet in wave 1. Until then, I assume we are in wave 2, and it's just forming as an ABC structure, and the A wave should ideally not break above 2,210. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then please check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.